Shaz, let's move on and take a look at the markets because Nifty Bank specifically seeing a mild recovery from those days lowest point, and Nifty 50 still languishing in trade with 90 points of cut. But the biggest drag today is actually Bajaj Twins because Bajaj Finance did come out with its numbers. But how's the commentary looking like? Which part of the commentary where the management is sounding a bit cautious right now, and what are the brokerages penciling in? Let's get in all those details from Varun.
Well, so if you look at the overall results of Bajaj Finance, they were not bad at all. But if you look at the overall commentary of Bajaj Finance, they were actually cautious on the remaining FY26. The company says that the consumer leverage still remains a point of concern for the company, and the biggest point of concern for the company is the MSME segment, which is actually slowing down. In fact, they say out of the 17 industries that they cater to in the overall MSME segment, 13 are showing signs of slowness, and around 3 sectors, in fact 3 of them are showing contraction. So there is a bit pain in the overall MSME segment, and they also say that in FY26 the MSME segment would be one of the segments which will actually show the slowest growth among all other segments. Also, the company says the credit cost for this quarter has been elevated, and especially on the 2 and 3 wheeler side, which the company is already running down the overall segment, there the overall credit cost has been a little bit high. The company expects the credit cost to actually lower from Q3 of FY26. That means for next quarter also might be the credit cost should be elevated because of the overall 2-wheeler and 3-wheeler segment. Also, the company says that the margins for this quarter have been at the same level as Q4, and going ahead they expect around 10 basis point improvement in margin. For the deposit, they have said that currently the overall deposit contribute 19% to the overall business, and going forward it is going to decrease to around 15 to 16%. So if you look at the overall commentary of Bajaj Finance, it was a little bit cautious, and especially on the MSME side, which is actually showing signs of weakness. So, and that's the reason you're seeing even after good results, the stock is down in trade today, because there are several brokerage houses like JPMorgan who has actually gone ahead and downgraded the stock.
So downgrades coming in across the board, not looking very good for the stock, because despite an inline set of numbers, it's actually the management commentary that has spooked the stock in today's trading session. Let's understand this and more from Shweta Daptardar, the Vice President Lead Analyst at Elara Capital, who's joining us. Shweta, hi, morning, and thanks so much for joining us. Give us your sense on the Bajaj Finance numbers we've seen, because at first glance, those numbers were above our estimates at ET now, but it's actually the management commentary and the refusal to give a guidance for now that's actually got the stock spooked so much. What are you making of this reaction that the street has on Bajaj Finance today?
Yeah, morning. So Bajaj Finance numbers definitely prima facie from the P&L perspective was steady state. But as you deep dive, we realize that the key industries such as MSME, auto, unsecured consumer loans, wherein the management clearly highlighted persistent stress, has definitely been leading to scaling back of these segments in the Bajaj Finance lending model. Even the anticipated growth for next year is going to be lower than 24-25% run rate, which was plausible in the earlier scheme of things. Moreover, if you also look at customer franchise, so while customer franchise and cross-sell franchise remains the bedrock of the entire growth strategy, over there as well, since Bajaj has turned cautious, the customer count will be now annually around 15-16 million vis-a-vis 18 million last year. So most of these parameters clearly indicate that growth is not going to be as strong as we saw in the earlier phase, and that scaling back of certain businesses, of course, will have some setback on the velocity. Having said that, a diversified product suite and, like I mentioned, the deepening cross-sell franchise, and this coupled with the expansive physical footprint of Bajaj, which spans across 4,000 locations, definitely these levers will maintain a long-term growth. But yes, in the interims, we'll see softness.
Coming in on Bajaj Finance, but Shweta, the other thing I wanted to understand is with respect to the caution commentary coming in on MSME segment, because after this commentary, we are not just seeing Bajaj Finance within the NBFC space that is trending lower. Stocks like Shriram Finance, L&T Finance, Cholamandalam Investment, they are also down, maybe taking cues from the leaders. And Shweta, the other thing that the company is saying that looking ahead, the MSME segment is expected to remain subdued in FY26 due to the macro headwinds. The names I took, Shweta, were the large cap names, but do you believe there could be deeper cuts and more pain in the small and the mid-end players?
Yes, so a couple of things here. So small ticket MSME financing segment definitely looks under pressure. And like Bajaj Finance highlighted clearly in their conference call, that leveraging or over leveraging is the problem. So MSME disbursements definitely will look flattish to single digit growth for the remainder part of entire fiscal, because as the company also mentioned, even the key businesses or steady state historical businesses such as medical professionals have also seen stress. So MSME vertical in certain pockets driven by over leveraging scenario definitely looks under pressure. As far as most other NBFCs are concerned, so look, we have to come to the terms to the fact that NBFC credit cycle has remained stronger on the MFI and MSME for over 8 years now. So definitely this reflection on aggression in terms of asset quality is happening very much now. The point and the moot point wherein you mentioned that most of the NBFCs such as be it Cholamandalam or Shriram Finance have seen certain impact in their stock prices is also stemming from similar reasons, that these lenders have grown cautious on incremental lending, because not only the over leveraging but cash flow issues are also the problem. Most of these borrowers are not just borrowing for business or working capital purposes, but it is also to fulfill other obligations. So net, the scenario remains slightly tight. Of course, the lower interest rate credit cycle definitely augurs well for NBFC financiers, but FY26 looks definitely modest in terms of growth and slightly higher in terms of credit cost on asset quality front.
Shweta, do you revise your price target downwards for Bajaj Finance now after these earnings and the cautious commentary?
Yes, we have slightly tweaked down our target price and reduced slightly the multiple for the subsidiary of Bajaj, that is Bajaj Housing Finance. And that's primarily also because there is pressure from the competitive intensities that is flaring up on the housing finance side as well. So yes, we have slightly tweaked down, while our long-term opinion remains very constructive and positive on Bajaj Finance. But the interim for next 1 year, and also given the fact that stock has rallied quite sizably from 700 to 900 plus rupees in past 6 months, we believe in the interim periods, the valuations will definitely sort of be range bound.
You did flag off asset quality concerns for the entire sector, and that deterioration is what we have seen for Bajaj Finance as well in terms of both their GNPA and NNPA. What also looks slightly concerning to me is the provisioning number that's gone up on a year-on-year basis. What are you making of some of these factors that are obviously ailing the stock today, but given these kind of numbers, where do you see the whole provisioning figure headed going ahead?
So yes, you're right. Provision quantum has definitely remained elevated, and perhaps it should remain on higher side for the entire year. And that's because there are multiple reasons. The management also highlighted regional challenges such as Karnataka impact. They have also provided for certain accounts which were restructured on the MSME side. We all know that they have been running down on the auto loan books, so credit costs definitely have been emanating from that portfolio as well. So building in these continued asset quality woes, the credit cost definitely will remain sticky. And also this is coming from the fact that the management has remained prudent, and the action has always preceded the consequences. So yes, from the prudency grounds as well, considering they have been always superior on risk management and execution side, provisions will continue to remain elevated.
Thanks for joining in with that